What's going on, everyone? Good morning, good morning, good morning. Nice little dead cat bounce here today. Actually, I mean, beautiful rally, right? Beautiful rally off the open, which again doesn't necessarily mean that the bulls are out of the water yet, but you know, good to see a little bit of a push higher today. Um, it's always nice to see. So currently, right now, Nasdaq trading at 20,045. Kind of just watching. I do have a 5-minute 20 SMA play setting up here, just waiting to see if it wants to confirm over a price of 57. I can actually get a stop buy in here if we do want to continue. And we'll just lock that in there just in case it wants to shoot up and go a little bit. How are you guys doing today? Everyone making some cash? Typically, I like to see these 20 plays work a little bit faster. Normally, when it takes a tad to get going here, you're going to see a quick wick in followed by a pullback. Now, technically, I have support at 45. I've got support all the way down to 33s, and last bit of support would be down here at 24. So playing micros, maybe we give it an opportunity, 15, 20 points worth of stop loss here. But ultimately, I'd like to see it hold our rising 5 SMA, which is sitting at around 20,020. So we'll see here. We'll see if this wants to confirm. We'll see, what the chart wants to do. Nice pullback here off the open. Nice pullback here off the open. Now, if you notice this big, move that we had, right? And then we had a little bit of selling that started at around 7:45 Pacific Standard Time. We pulled all the way into around 8:30, so just about an hour's worth of pullback. But where we pulled back to is a nice spot in terms of what we had as support. We have a 200 SMA support here. We got that hammer candle. This was actually a little bit of that reversion pivot that I like to take a lot of the times off of strong levels of support. Again, depending on the time frame that you're looking at, your strong support can be completely different than my levels of strong support. If let's say you're looking at a 1-hour chart and I'm looking at a 5-minute, or if you're looking at a 1-minute chart and I'm looking at a 15-minute chart, right? Based on what I'm looking at on this 5-minute chart, this 200 SMA is acting as an area of support, because you can see here, once we got the breakout over the 200 SMA, we put in a little bit of a back test, and then we really started to explode. And then when we started to put in this rounding top, and we came right back down into this area. So original breakout was there. Again, we did have a nice opening drive off the open with a 5-minute 20 SMA play as well. A lot of the bulk of my work was done early in this range. Currently sitting at $1,500.70. Number of trades is 19, but again, that's a little wiki wacky because I was playing multiple contracts, scaling in and out. So, leaving runners, taking runners, so forth and so forth. I think it's closer to probably like 8 trades, 7 trades. A lot of it was just taking continuation, right? Like just more momentum. We pop, original plays there, pull back, hold, pop again, same thing, flag pattern here, right? So a lot of this is just like getting in on this momentum. So what I'm waiting to see here is if we're going to continue to break to the high side here. Bollinger Bands are getting a little bit tight. I could definitely see a pullback. We need a pullback. If we do get a pullback into 20,000, that's great. I want to see it hold. If I can put in a higher low, that'd be even better. If I wanted to, again, discretionary, but if you wanted to, you got a little bit of a bull flag here on this 5-minute time frame. If you go from high of day down to this high, so you can essentially tell yourself, well, if we can break this and then maybe pull back and confirm, might be an opportunity to go long there. Again, always use previous candle low as your stop, unless you're running a mechanical stop loss. To each his own. We'll have to see. We did build on this push up. We did build a lot of support. So truthfully speaking, we can kind of remain in bullish context for the day. Again, remember, we're still in a sell cycle. trading below the 200-day and the 50-day moving average on a daily time frame. But if for the day, if we can remain trading over 19,000, let's call it 930, we still are in a little bit of bullish context where maybe these bounces or these pullbacks can turn into bounces. So So let's see how far exactly it wants to pull back. Again, we did set up a 5-minute 20 SMA to the downside. I'm not too interested in that downside move just because I don't want to get trapped. So I'll kind of stick and lean into the longs a little bit more unless we were to start closing below 19,938. If we do start to close below 19,938, then I'll be a little bit more interested in the shorts. However, 51-point drop is nothing to bat your eyes at. This is a pretty good substantial drop here. Even if someone was feeling a little bit risky and they wanted to short, I mean, you had an area of support here at the 5 SMA. You could have shorted this 20 SMA into demand, which is your 200 SMA. And that was between 20,022 down to around 20,000. So 20 points worth of room there. Definitely could see how someone got into that short, targeting the previous swing low. But for me, because we are green on the day, I do want to be a little bit more cautious. I want to pick my spots a little bit better. I don't want to feel like I'm chasing, right? That tends to happen a lot, especially when I go green. I don't know about you guys, but when I go green on the day, I tend to fire off more trades because I'm like, well, I'm already green. What's the worst that can happen? Well, I'll tell you what the worst that can happen is we end up, going into drawdown, losing a couple of trades. And the next thing you know, the green that we had is just magically disappeared into thin air. And now we are chasing red. I don't want to really do that. So more patience. I've been kind of stressing more patience from like literally February. It's just been a little bit more of a trickier market to trade in terms of the range, right? It's not necessarily the setups. It's not like I'm not being able to identify setups. It's just the range. Beautiful setup can happen. I'm into the trade and it's pulling back 20 points, right? But theoretically speaking, it's still technically intact. There's still momentum. It's just the range is so damn big where, I have to really size down to allow myself to stay in the trade. So I made that adjustment in February. And then another adjustment that I've made since February is definitely walking away from the screens, whether it's green or red after a couple of trades. And then I take a nice little break and then I kind of come back around this time to see what is the market really doing. Is there going to be a final move going into or coming out of lunch? I typically see, the majority of my trades are taken in the first, let's say, hour. And then there's about an hour dead period where I'm not really on the charts that much. I'm taking a break, getting my mind off the charts, getting my eyes reset, just kind of just ignoring everything. And then I come back around this time and I look and kind of see, okay, what did we do the last hour? What potentially could happen? And then see if we can catch a little bit of a move. And I typically like to come back in trading micros. So there's not a whole lot of stress if I do, take a couple losses. So we'll see what this wants to do. We are pulling back into our 50 EMA here. Guys, Apex 80% off sale is back. You guys can use code DAnthony if anyone needs any accounts today. It'll be on for 48 hours. Also, make sure to hit the thumbs up button, guys. Definitely helps YouTube spread this video out to more traders. I would highly appreciate it. What I'm looking at here, 19,975 getting a push off that 50 EMA. That level hasn't been broken since we essentially reclaimed it to start the day. So it would kind of be fitting and it would kind of make sense that as these Bollinger Bands get tighter, if we do lose our 50 EMA, maybe that can start to signal that the high of day is in, right? Because if you start to lose this 50 EMA, now you're talking about breaking this upward structure, and you've definitely got a lot of room to come all the way back down. Do I think we're going to come all the way back down? No, but anything can happen. It's the NASDAQ, right? You can get one headline that kind of changes everything from the media. So we'll have to kind of see. But assuming that we can hold this area that we reclaimed, I'm still going to be pretty bullish here for the day. What's going to happen now is we're going to get trapped in a little bit of this range here. So if we look at the range, 19,940 up to 20,040, it's about 100-point range here. So 100-point range, and we're smack dab in the middle, about 50%. Typically speaking, do you want to be long or short in the middle of a range, right? Ask yourself that question. And then you're going to get an answer as to what you're looking to trade, right? If we're trading towards the bottom of the range and we break the bottom of the range, what would you be looking to do? If you're trading towards the top of the range and we break the top of the range, what would you be looking to do, right? So the same question, again, zoom out, guys. A lot of times I used to have a really bad problem with my eyes focusing on this current candle, right? So it's like naturally my eyes would gravitate to where the price action is currently at. So I'm just fixated right here, and I'm fixated right here, and I'm fixated right here. And it's like tunnel vision, and that's all I was really looking at for a long time. And I would get so fixated here where a lot of times I'd be like, okay, we just broke the lows, I got to go short. And then next thing you know, it's up, right? It's like going against me, and I'm stopped out, and I'm like, what the hell just happened? And it would be like the same thing to the top side, right? We'd start getting up to the top, and I would anticipate the break, and then it would pull back down, and I'm like, what the hell's going on? So it took me a while, like honestly, like a year. It used to happen a lot in stocks. But I used to like get fixated right here on the chart, like just visually. Even if I was trading, a 5-minute time frame, it's even worse when you're looking at a 1-minute time frame. And the point that I'm making is that when you get just fixated on what's happening right here at these lows and what's happening right here at the highs and what are we doing in the middle, you tend to disregard the entire structure of the day. So the entire structure of the day was pretty rock solid to the upside, and now this is just a little bit of consolidation. So for me to want to, anticipate the short that it goes lower, which it definitely could, and the market can definitely wash out 100 points. We've seen it happen before. I don't want to be so eager to jump a short when this is just a pullback into rising support, right? I would want to see a breakdown of the structure. I would want to see a back test, a decent size pullback, and then I would want to see weakness, and then I would want to see that loss, right? That would be something that I would want to see to the downside. And the same rules would apply to the upside. I want to break that back test and then go. So don't get fixated on what's happening right here. Look at your whole chart, right? Look at your whole chart. Again, if you just zoom out and you look not even 10 candles ago, you have a double bottom here, right? So typically double bottoms are what, guys? Areas of support, right? And they don't have to hold this support, but I definitely don't want to be shorting right into a prior support level, especially when it had a nice tailing wick like this, showing me that buyers had some strength to kind of pop back in, because it's the time you try to get cute here where you get stopped out. But it's also, I want to make this comment, it's also the time you let it go that it does wash out 30 points, and you're kind of sitting there and you're like, what the hell, man? If I just would have taken that trade, I would have made a bunch of money, right? I should trust my gut type of deal. But what it comes down to is what's aligning with your process, right? What's in your plan right now? Like if you don't have a plan right now, if you don't have a setup based on the structure that you're getting presented to you, you can't really do anything, right? So you gotta kind of have to break out of that mold. You have to break out of that mold of you're trying to, trade off the fly. You don't really want to trade on the fly, right? You want to have a plan, a specific level, certain set of circumstances or events that are going to happen for you to take the trade. That way, even if the trade loses, guys, you're going to be able to stomach it a little bit better. Because it's not just something like, oh shit, I should just get short, market pushed up all day, let me go short, right? Or, let me bounce this because the market's strong and then it continues to fall. Like that's kind of just trading on a whim, right? Again, I've said it time and time again over the past 5 years that I've been on YouTube, but losing traders, and again, we're all losing traders at some point in time in our careers, and we all still continue to lose. But the difference between a losing trader who's not able to even draw any type of profitability out of the markets and someone who is able to extract money out of the markets is that over time you stop doing stupid shit and you just start following a plan, right? You just start making your trading be like extremely boring and extremely like routine, right? Like just get really comfortable with, not sitting here all day and feeling like you're going to make $1 million. I mean, I'm very curious. Like if I could do anything, coming out of this whole, trading, YouTuber space, coaching space, I would like to really document like 1,000 traders, right? Like retail traders, and document like what are their biggest problems and do they identify those problems, because honestly 90% of you guys have already identified what your biggest problem is, but there's something in the way that's not, it's just we're not breaking through the barrier, right? And again, if I speak from my experience, the biggest thing was when I really boil it down, it's like, why did I have so much trouble in the beginning? And I think my problem was like not being satisfied, not being content. And I have to think about, why was I not content? Why was I not satisfied? Right, guys, we might be coming down to our 50 SMA here. So we've got a little bit of support here at 946 and 936. This is the area I'm looking to see if they're going to trap at this area. I think it's just a lot of self-reflection and asking yourself a lot of those tough questions, right? Because I think a lot of us already know what our major problems are, but it's like, why are we not addressing them? And even when we say we're addressing them, we're not like executing on what we say we're going to do. And I would love to figure out what that barrier is, and again, like just speaking for myself, a lot of it was just not being content. And I guess I can say, because I felt like I knew what I was doing and I understood the markets and I understood the process of how to make money in these markets, and it wasn't going through my head as to why I couldn't just get it back on the next trade, or why I couldn't have a $10,000 week every week, right? Like, why did it only come around once in a blue moon? So that was a lot of stuff that I had to like really work through as a trader. Again, one thing that really helped me, and this is God honest truth, was when I got a trading mentor, someone that I can speak with, someone that I can learn from, and someone that I can talk to and actually hold myself accountable to in terms of trading, because it's very easy to kind of sit in the dark and think that we're doing everything right or trying to create this picture perfect system, and then when the system doesn't work, not tell anybody about it and then just continue to do our own thing. But that really helped. And then there was a period of time, this is about 8 years ago, where I was involved with a group of traders, and we would all trade house money, I guess so to say, together, and going over trade ideas and hearing why something aligns with someone else's strategy, even though it has nothing to do with my strategy, helped for confluence. And then also hearing the other side, right? Because we always have to be ready for both sides of the trade. And we have to be able to hear all angles, right? Because if you really think about the markets is nothing more than buyers and sellers, right? So if you have a big arena with people who are buying and people who are selling, everyone wants to buy and sell at a different price. So when you realistically think about that, there is no one entry. There is no perfect level. Sure, someone can say, if we really, take out London highs in yesterday's session, this market's going up, right? But what if there's a bunch of sellers in this arena that are saying, okay, let's bring them in. Let's allow them to sell. Let's allow them to think that the market's going to go higher, and then we want to sell 10 points above yesterday's high. Boom, and we dump all of our liquidity on them, right? This is how I think about things. And let's say that there's in this arena there's 100,000 people total, but there's only 30,000 buyers, right? But there's 70,000 sellers. So those 30,000 buyers that are all getting ready to push this through previous day high, they're all happy and everything's going up higher. And then the 70,000 sellers say, okay, here you go. 10 points above yesterday's high. We'll give you everything that you guys are looking to buy, but there's too much supply for them. Does that make sense? Supply and demand. So if you have buyers who are looking to buy at a specific price, but you have just too many sellers, they're going to eventually absorb all of those buyers and price will continue to go down. That's kind of what we've been going through in the past 3, 4, 5 weeks now. There's just a lot more sellers in this market than buyers. You can clearly see that even your pullbacks, they're huge. I mean, the volatility is huge. I mean, this 5-minute candle, 62 pointers range worth of candle. And normally on a 5-minute time frame in a normal market, or what has seemingly been normal to us, 30 points, 35 points used to be a lot. Now you can see a 30.1-minute candle. But that's just a little story time talk there on, how I think about things. But let's see here, we pulled back into this support. This is the last level of support here. So again, we want to see if maybe we back test this wick a little bit and then try to pop over a high price of 19,983. I mean, I might be interested here to gamble a little bit and see if we can retest 983. Assuming that we stay over, let's call it 950. So it'd be about a 20-point stop loss from here. Max pain would be about a 35-point stop loss. Any closure below 39s, I'd like to see it dip down a little bit more so I can get a better entry on this thing. And I want to try to play a bounce, something quick, something easy on the micros with less risk. So the farther we pull back, the better it is for me. To try to get a little bit of a better entry. Again, these are just trade ideas. This is not a specific setup. This is not like a for sure thing. This is, putting on an idea and letting it kind of work with the chart, price action wise. But I want as least amount of risk as possible. So 48, I have support, and I have support at 38. So from right here, we're looking at about 20 points here. It's all about timing on these type of plays here. And again, if it runs through a stop, that's fine. Let's try to get a little bit of a bounce here on 3 micros for a little bit of a scalp and see if it wants to cooperate with me just a little bit here. My entry price is 19,961. Up about 5 points here, 7 points, 8 points. And we're just going to take a quick and easy $50 on that, guys. Again, that's kind of the way that I trade throughout the day, even when I'm trading minis. So if that was a mini, if that was just one mini, my normal position size is one mini, that's a $200 trade. 8 to 10 points. Again, maybe a $150 trade, maybe a $200 trade, but it's playing little price action, little ideas like that, right? I see where I've got support. I know we could potentially come back up and test the high of the previous candle. I want to get the best prices possible. That way, in case it does run, and it does invalidate that idea, well, I'm going to take the least amount of heat and damage as possible. Get into it, let the puppy go green, and then get out. Again, there's traders who would get into this trade and they're looking for a move that does something like this, right? They're looking for a move that keeps doing something like that, maybe retest that high. That's not me, right? Like, I'll use this as a stop and I'll just target this little move here. That's it. You know, that's 10 points there. You take a couple 10-point trades a day, you know, you're extracting 20, 30 points out of the markets. It's a few $100s, right? It's a few $100 depending on your size. And I think when we're playing the prop firm game, you know, you definitely want to be protective. And it's not really about trying to make you know, $20,000 on one trade. We just really need to like we just really need to log in green days and you just let time pass. You know, some of the best traders that I've talked to who have, you know, extracted decent money from prop firms, they're not realistically, I mean, do they get payouts every, let's call it 10 days, right? Some prop firms are 8 days, 5 days, whatever. But are they realistically taking out $50,000 every 10 days? No, right? Like they might take out from a handful of accounts in a couple of weeks, but like a lot of the bigger money is just from like slowly building these accounts over 30 days, right? Like when's the last time you guys have really sat there and built up a funded account for more than 30 days? You know, 30, 45 days, and then take a payout. You got 10 accounts, taking out 2,000 across 10 accounts is $20,000 a month. You know, $20,000 a month. Even if you divide it times two for the 2 months of time, it's averaging $10,000 a month. Versus a lot of times, you know, we're trying to make that $20,000 paycheck in 10 days. And what ends up happening is you just over leverage yourself to the absolute gills. And then, you know, you're constantly reloading accounts, which, you know, I'm big on reloading accounts and having a little bit of a vault going. You know, anytime Apex or any one of these other firms runs a decent sale, I'll go and grab 10 accounts. That way we have them, right? Because anything can happen on a day in and day out basis. I definitely think you're a lot less stressed if you have a bank of, let's say, 10 accounts versus if you're just trading two accounts and you know you absolutely have to make money on those two accounts. You know what I'm saying? So, you know, start building up, guys. And again, I'm not saying you guys have to go out there and buy 100 accounts today, but, you know, every time you get paid, you know, start chipping away, or anytime you got some spare cash, or anytime you take a payout, you know, reinvest into your business and continue to grow it. So price action here still kind of holding at this 50. I do have support down here at 935. Any type of closure below 935 definitely changes things. Definitely changes things. But one thing that we do have to keep in mind is that we are in lunch. So if I look at what did we do prior to lunch, well, we kind of ripped and rallied, right? What are we doing going into lunch and during lunch? We're pulling back, right? It's pretty typical. So even if we were to lose a 935s, I mean, you could see a quick sweep down here, and then you could see a reversal back up. And it doesn't mean that we're going to have to come all the way back to the high of day or anything, but like the market can just kind of do something like this all day today, right? Market can do something like that, or maybe just falls shy of the high of day. That's one idea. You could also lose this area, then come out at lunch and try to back test, and then get rejected at the 200, and then just kind of trickle down. That's also a possibility. So I like running through those scenarios. That way I have an idea mentally, right? Because I kind of played it out in my head of what can happen. Last 20 SMA play on a 5-minute was nice. Spot like this, you want to be patient. Spot like this, you want to be patient, guys. Unless you're in the short, right? If you're in the short, you know, I'm going to put myself in the trade. If I was in a short here, I would be, let's say I'm trading 4 contracts. I would be selling 2 contracts right here, right now. That's what I would be doing, would be selling 2 contracts right here, right now. I would definitely be moving my stop loss into profit, and my stop loss would probably be 980 if I was already in the money, okay? Depending on when I got into this trade. If I got into this trade below, let's call it 965, my stop loss would still be, you know, working its way down into break even right now, but I would be interested in taking my profits here because this breakdown started way up here at 20,019. That was 60 points ago, 70 points ago. So what tends to happen a lot is, and I used to do it all the time too, is I would watch this move go all the way down and be like, okay, great, let's short now. And then it pops 20, 30 points. That would get me into trouble. You know, and I have to go back and back test, and I would ask myself the question, why did I want to short here and why did I not want to short here, right? The better short was right here, not down here. And obviously, before we know that the price is going to do this, the mind is probably telling us, well, if you go short here and it pops and goes high of day, you're going to lose. Okay, but we have a very clear out, right? So if trading is all about managing risk, I would rather be short right here with the stop loss right above here. That's a small risk. Then to get short here with what? A stop loss here or here or here? Like just a dead cat bounce could take you all the way back up there, right? So this is your better short opportunity from a risk perspective. Remember, always think about things in risk. What are you risking on this trade? You know, and a lot of times people say, well, I want to risk 10 points. No. What are you risking? Means, where's your trade invalid? I don't care if you want to risk 10 points or not. Is your trade technically broken at 10 points or is it broken at 25 points? Right? Well, you know, probably closer to 30 points. Okay, great. Then how much size were you going to trade? Well, I was going to trade 2 mini contracts. I don't think you can risk 30 points trading 2 mini contracts. So we got to get down into micros. Well, I don't want to. Well, then you can't take the trade. Sorry. Like, you're not allowed to take the trade. I think that's what people need to hear more. Like, you can't take the trade, little Johnny, little Timmy. Like, you can't take that trade with 5 mini contracts risking 20 points on a 50K account. You're going to blow. Like, you better be right. Like, you better hope that you're right or your account's gone. But I can make a lot of money. But in that point, you're only looking at the benefits. Like, do you look at the negative? In me, I look at the negative so damn much that looking at the positive, or when the positive happens, I'm just kind of like, I wasn't even expecting that. Like, I didn't even think it was going to go in my favor, because I was already expecting that negative, because that's what I'm focused on. I'm focused on my risk. Like, and again, I F up all the time. Like, on a week by week basis, I'll still have, you know, a blunder in the mix where it's like, everything that I've known or everything that I've learned or everything that I've experienced in 13 years of trading seemingly just goes out the fucking window for like a brief 5 minutes in time, that it's like frozen in time. And it's like, what the hell just happened, right? But also, the 13 years of trading experience has helped me snap out of that and not allowed it to snowball. And I think the newer trader allows things to snowball. I really like this long here. I really like this long. I like it to put a gamble on it here. So if I was to put a gamble on this long, I would be using something like this as a stop. We're already going into probably. I would use something as a new low as a stop, right? If I can't get what I want out of it, my entry price is 19,938. We're up almost about 10 points here. Back down to about 3 or 4 points here. I would like to see this continue to push just a little higher here. Back to break even. Now down a little bit. So if this takes out 19,915, I'll just get out of the trade, right? It didn't work. A little bit of an overshoot here of this demand, looking for a quick snapback. Doesn't have to give it to me, but that's the idea. That's the thought process, and I want to be in with the least amount of risk as possible, right? Like, I don't want to start going long way up here with the potential to pull back. I want the least amount of risk as possible, which looks like this wants to come down and stop me out. quick trigger finger here. Testing those current lows. Breaking those lows by about 2 or 3 points. How much time is left here? 5-minute candle. What time is it? I want to see when this candle closes. Where the hell's my clock at? I'm just going to get out. So that trade idea didn't work. Took a little bit of a hit there, about 150 bucks, I think. But the idea for me was simple, right? If I can tag that low, it's easily a $200 to $250 winner to the upside. Now, because it doesn't work doesn't mean that it was necessarily a bad trade. Yeah, the market is selling off a little bit, but again, going back to the theory, I don't want to get short at the lows, right? I don't want to get short at the lows. So we take it for what it is. That's a nasty pullback. I wouldn't be surprised if there's some news or something, if there's a headline out. It's a 70, that's a 70 point, it's a 70 point range candle. So now I've got support all the way down here at 829. So if this wants to continue to roll, 829 is going to be the spot. Whoops. $8.29. Let's go to a higher time frame here and see what we can see going on here. Yeah, nasty pullback here on a 1 hour chart. 1 hour chart definitely does have room to 856. God, such an ugly chart. You know, I mean, this 1 hour chart, such an ugly chart. Big sell off in the pre-market, big recovery back up to the highs, big looping. Very nasty price action. I do want to say though, price action the price is still weak. Like this market is extremely weak. We couldn't even fail. We couldn't even achieve getting over pre-market highs, London highs, whatever you want to call it. Right? It just dead cat bounced into those highs, got rejected, and sold right off. Weak. In a strong market, like in a bull market, which we are not in a bull market. We're not quite in a bear market, but we're more sell-sided. In a bull market, this test highs, pulls back, and guess what this candle does? Rips through and just doesn't have to scream, but it just rips through and just continues trading higher. That's how you can tell that. That's how you can tell that we are definitely in a sell-sided market. Learning that moving averages can be used. Yeah. So learning averages are, it's nothing more than supply and demand is all it is. It's just support and resistance is all it is. And that's the only reason why I use them. It's has nothing to do with price has to get to these levels, has nothing to do with anything. I look at them as areas of confluence. And obviously, the stronger the moving average, the more I respect it. So 20, 50, and 200 are the ones that I would personally start off with. I trust those ones. Those are the strongest moving averages that you're going to have from a simple moving average perspective. And again, look at what the market did. If I'll just take everything else off and I just look at the 20, 50, and 200, look at these three levels. Okay. So the 20 is in white, the 50 is in red, and the 200's in yellow. So in the pre-market, or over, let's call it London, right? In London, we lost the 20. We lost the 50, and the 200 support held, okay? Then we recovered. We reclaimed the 50. So you can tell yourself that if price achieves confirmation over the candle that reclaimed its 50 simple moving average, then maybe you can push into the 20, right? And if you close over the 20 and you can confirm, then you're going to have a hell of a good long over 20,100, which was about yesterday's FOMC high price. That never happened. So look what happens here when this 1 hour chart, 1 hour candlestick lost the 20 SMA. Big dump. Look at where we're standing. 50 SMA. Now, is there other moving averages in here in between? Sure. But if you just look at these big three, it'll definitely give you some good ranges to play. You can definitely be on the right side of the trade. Okay. Which again, if I would have just quickly zoomed into the 1 hour chart, I would have never bounced it from where we were because the 1 hour chart was definitely weak. So that's my bad for not looking at the chart. But yeah, I mean, and I've used these moving averages for years. I call it the big chart. And the whole reason why I came to these moving averages, because over time, you know, I'd be in a trade and then it would just stop and it would reverse. I'd be looking at a pullback and it would stop and it would start bouncing. And I'm like, why the hell is it doing that? Like, you know, why? Why are we like, you know, every day trading at the same level, same level, same level, and then all of a sudden we break that level and the price explodes? Why? I started adding one moving average, adding another, adding another, adding another, and it starts to paint a little bit of a picture. Now, again, it can be very overwhelming. I wouldn't recommend anyone to trade this way. It takes a long time to get your eyes adjusted to reading the charts this way because there's a lot of shit going on. And I definitely look at a bare bones chart like what's on the left-hand side just for price action wise. But ultimately, it kind of gives you an area to respect, right? Like this area we were talking about, the 35s or whatever it was, there's nothing below, right? So if you really take this into account, there was nothing below that orange line until here. Look how fast price just sunk, right? Whoops. Because there's no more demand. There's no more demand until here, which I want to take a little bit of a short here if this wants to go. If this wants to go, maybe we can take a little bit of a short. See if this wants to confirm lows here of 19,868. Pressure is still down, creating a little bit of a flag here. If I was to draw it out, you know, if we start to break down, you definitely have room to 828. Not saying that it has to get entirely there to that spot, but you have room, you know. So again, for a scalper, you start cracking through this area, you might be able to catch some more momentum. Again, we are kind of chasing the move way down at the bottom, but if this is a support, and my whole theory is stocks trade from supply to supply, demand to demand. So I'm not saying that it has to touch this area for me to take profits. Like it doesn't need to touch 19,828 to an absolute T. It does not have to. But if I get into a short and we are driving into that area of demand, because this is short, we're driving into that area, I have no problem taking profits. You know what I mean? So even on this bounce, where are we trying to get to? Like we are trying to test this 5 SMA sitting at 19,912. It's trying to retest that. If it retests that and gets rejected and falls through, there's a good shot that it drives into 828 or close to it, right? Like again, it can be 10 points off, 15 points off, but that's fine. I have no problem taking 10, 15 points off this move. So I want to see, all I'm really looking at here is I want to see the reaction at this resistance, supply, whatever you want to call it, moving average. I want to see the reaction here. If it takes out this supply, it might go up to 19,929. That's the only way that I'm analyzing the markets. That's the only way that I'm analyzing the markets, right? I want space. Like, I'm not going to get carried away and say, okay, if I reclaim this supply, I can go up to this supply. I'm not going to do that. That's fucking crazy, right? Like, I'm not going to be trading. Okay, there's 5 points here I can get. There's 2 points here. No, no, no. Like, I need space, right? I need space. The short here would have been better, right? The short here at, what is this? The 100 simple. Any loss of the 100 simple moving average, any confirmation of that loss, great trade, because there was nothing down here. This is space, right? For the long, either I'm taking a long on a touch or reclaim down here at 820s, right? When we get back over it, if it falls, or I'm not really interested long until we take out this 200 and this 20 way up here at 19,997. So bulls have a tremendous amount of work to do before I'm even comfortable getting back long, unless we flush through 820s and then reclaim it. Then I've got space, right? But like even right here, you're gonna watch this price go into 930 and kind of stop there, right? Or break 930 and then kind of pull back a little bit. It's gonna test this area of supply. Once you get over one area of supply, you tend to gravitate towards the next area of supply until you get a firm rejection. Again, buyers and sellers. Where are there more buyers? Where is there more sellers? Are there more sellers here than buyers? Because if there's more buyers, then we'll push right up into 950s. So we'll see. Guys, make sure you guys are hitting the like button as well. Got a few people in here. But again, also we don't want to anticipate. That's a big problem that traders will anticipate. Like, I think it's coming here. I think I'll just take it long. Right? Don't anticipate. Just wait for something to happen and have a clear plan. So if it does happen, you are ready for it. Right? You want to be ready for it. Boom, 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 boom. And I have a stop sell order sitting here, but I will cancel this if we get too high. Can I explain so many EMAs? What do you mean? What do you mean? Entry criteria. They're not really used for like specific entry criteria. It's just used as confluence. I want to see how we react at those levels. If we lose a big one and we've got a lot of space down, that might call for an area of entry. I mean, I don't use them to like say, okay, we lost this one, I have to take it into this trade. I don't do that. It's just where do I have the most space? Like, okay, I'm going to zoom in on this chart. Where would you guys say, I'm going to zoom way in here. Where would you guys say that the most space is at? Like, where do you have the most potential for trades given on space? What colors? Like, just call out the colors. Where is there the most space for trades? If we're looking for, let's say, 10 points, right? 15 points. Yeah, we're in it, right? So we're definitely in one of them that has the most space. Okay. So we should be short already. Like, you should have already been short. And again, you should probably be out. It was a 79 point range candle, orange and blue. So below the orange, we had a lot of space, right? There was a lot of space here between orange and blue. So basically all you're saying is that you would want to be close to getting short somewhere up here to potentially target this move down here. Now, obviously, you're not going to tell yourself, I need this 120 points, right? But like, get into the trade somewhere here. As long as you're trending down, look at the shorter term moving averages. This is a 5 SMA. This is a Bollinger Band. As long as you're trending down below them, hold, and then take profits, right? There's also, for me, there would also be space here above the yellow line into this blue line. And obviously, if we reclaim the blue line into the top Bollinger Band, there's space here to here. There's space here to here. I want to stay out of this junk. From this orange line to that yellow line. I don't want to do nothing here. There's too much supply. There's too much supply. It can quickly wick up and pull back down 20, right? I don't want to be in that. I want space. And the reason why, I trade options. That's my forte, right? Futures trader is just like a side income for me. I trade options. And when you're trading options and you're dealing with those premiums, you need space, because I'm not looking for 10 cents. I'm not looking for, Tesla to move 10 cents, 20 cents. I need Tesla to move dollars, right? And if there's 25 cents in between supply and demand, I got no trade. But if I lose this area of demand, quote unquote, right, whatever level it is, and I have $3 into my next area of support, that's a trade I want to be involved on. And I can skim, $1 off of Tesla or whatever. So it's all about having space. I'm in that trade and I'm out that trade. I fucked up. I had an order there and I caught it right as it got filled. I effed up because I had four minis on the table, not 4 micros. I completely forgot. I switched charts to get my more moving averages on this trader bait. We walked away with $140. That was lightning fast. I effed up. Did not have any intentions of getting in that with 4 minis. Had to quickly get out of it. That's another thing too, guys. If you ever make a mistake like that, because it happens. Let me get back over to my damn micro chart. If you guys ever make a mistake like that, where you get in, I don't even care if you're in profit, get out. That was not your plan, right? My plan was never to go into that with 4 mini contracts. As soon as I caught on to that, when I seen that P&L fly up $200, $300, I got out. Again, Dinga, I wouldn't try to learn how to trade this way. It took me many years to learn how to trade this way. Like, took me many years. This would be more something that would be suitable. Just get these 3 moving averages, 50, 200, and 20. It's just something like that. We're below all the moving averages. We're below, let's call the moving averages supply. We're below supply. Are we more sell biased or are we more buy biased right now? Right? You're below supply, you're sell biased. You're above supply, you're above demand, you're buy biased. S2 minute 20 play, S88 to 62 strong level from pre-market. Sell biased. Yeah. We're sell biased. So any pop, right? Any pop we would want to get into a little bit of a trade, right? Any pop, we want to play a rejection. Now, again, you can go into different time frames and you can find setups. There's not really no setup on the 5-minute time frame, but if we look at the 1-minute time frame, got a little bit of a double bottom here. I'm going to mark out this new low of day. We're still below supply on a 1-minute time frame, so we're still a little bit short biased. If this does pop, because notice this last pop, it pops right into the 20 SMA, sells off, right? A lot of people would be looking to say, okay, let's go long here. There was no confirmation long, even though you do have space. There was no confirmation, meaning you never took out the previous candle high and it just sold off. So you'd want to be more short biased. Even if you got in here at 9:41 Pacific Standard Time short, and it does pop, it does go against you, you would be in drawdown, you should be super calm because you're still under supply. Just hold the damn thing until you make money, or it closes over the 20, you get stopped out. One thing that I'm focusing on here is this candle, 944 PST. 944 PST. I like this reversal candle here. It's a little bit of a hammer candle. We're getting a little bit of a dead cat bounce off this. Let's see if we can reclaim the 20 SMA, meaning I want a closure over the 20 SMA, and then I want to see that new high get confirmed. Where the hell is my clock at? There's my clock. 9:47:35. So there's about 30 seconds here, 25 seconds on this 1 minute candle. Again, look at how we're getting rejected at the 20, right? Imagine everyone who's like, oh, okay, this is a bounce here. We're going to go higher. It's pulled back on you. It can go up, but I'm just saying you got to be freaking careful. And even if it closes over this 20, doesn't necessarily mean that it needs to bounce, right? You're still under your heavy moving averages here. You know, I don't need all those other moving averages to trade. It's just I'm lazy, so like I like to see where I could be running into supply and demand versus you know, having to mark shit out on my chart. Let's see here. Would anyone be interested in this short? Would we be interested in that? What I would be looking for right now is two things. Confirmation through 860, right? Maybe a break of this flag down into 860, or a break and hold over this 20 SMA. I'm going to take this short here and see if I can squeeze something off of it into 860. Into 860. I just push me into the 60s is okay. Push me into the 60s. 68's got traded, but it got bought up. Here's 60, 67. We're up 50, 60 bucks. I'll take it. There it is. Take the flag into that 858 area, 860. You see that? We break the flag. We take it into 860s. Again, my target was 859. I'm not a stiffler. I'm not going to say I need to get 859. I don't care. Just get me down there, right? Like, get me down there. Get me down there. Somewhere close to it, and I have no problems taking profits. So we're currently up $1,600.38. We did take some losses today. We're hitting at 86% win rate, 13% losing trades. I got 3 losing trades for 825, but our winning trades is 2,400, so we're net positive 16. That's perfect. That's perfect. And again, right now, full disclosure, I am over trading, but I am trading micros, and we're streaming here. We're having a good time. I'm going over shit. It's fine. I'm not going to give away all this profits. Even if I lose a couple trades, I'm going to be fine. But I will say, if I was not streaming and I had something else other to do right now, I would not be trading. I would be walking away. This is a problem that a lot of people have. You are not identifying that you're already green on the day and you're just still trading because you want more. Again, I am completely risk off trading 2 or 3 micros. You've seen it. The last couple trades that I took, $50 winner, $60 winner. I'm not looking for much. I'm not going to give away the profits. I'm not going to make, $5,000 today. It's going to be impossible with the size that I'm trading. I'm not going to probably make $2,000 today. If anything, I'm probably going to finish up or down $100 from here, up or down $100 or $200 from here, if I take a couple more trades. Plus 400 to minus 1,200 max deal. How do you stop over trading? I'm going to be completely honest. You gotta get content with walking away. I'm going to ask you a direct question. What the hell was wrong with $400? This is on you. No one can tell you anything. There's nothing you can do other than physically getting your ass up off the chair and not trading. You got to be strong mentally. So I'm going to ask the question again. Why the hell didn't you leave at $400? Because you thought you were going to make more? Is that why? Do you know how many times I've been up $1,000 and blown an account? I've been up $1,000+ and blown an account. I've been $500 away from getting funded and blown the entire fucking thing because I'm like, I'll just pass it today. Next trade was a losing trade, couldn't handle it, wanted to get it back, lost it. You experience nothing different than any of us. You experience nothing different. You feel nothing different than your best trader. It's just, how do you handle it? The only thing different between the two traders is some people who have a little bit more experience, and you will get there with time. Again, remember, with time and experience. And maybe it does take for you to lose some more money. Maybe it does take for you to blow some more accounts. But I'll tell you what my point was. I was tired. And again, excuse the language. You got kids, you got the wife, put the headphones on, mute me or whatever. But there comes a point in time where you get fucking tired of losing. And you hit rock bottom. I've told this story many times. I've been trading for 13 years. My first 2 years, I lost $39,000. After making $50,000, I lost it and lost 39 on top of it. So I got fucking tired of losing and banging my head against the wall, looking for more, trying to be greedy, trying to make more money, trying to do this. It's, again, the number one problem with over trading is you. Get up, force yourself. If you want to lose 10 pounds in 30 days, how are you going to do it? Are you going to do it by sitting on your ass? Yes or no? So if you want to pass evaluations, you want to get to payout, how are you going to do it? By locking up $200, $300, $400 a day, or trying to make fucking $1,200 today? What are you trying to do? What's going to get you there? Nice pop over the 20. It's always the one more trade idea, the one more trade mentality. God damn it. I wish this was not such a big pop. I would be interested in taking this into 920. This is too big of a move for me. Fuck. We're going to try it anyways. Fucking pullback spots all the way down here at 890 though. See if I can get a little bit of momentum. I want fucking momentum here into 920s. I'm going to have to cut this trade early because there's just too much risk on this trade. We'll just take 25 bucks there. There's just too much risk on that fucking trade. Does anyone understand that? Like, does anyone see why I didn't like it as much? Look at the pullback. I just want one person to say that they understood. Look at the pullback, guys. Do you see why I got out? I took 22 bucks on the stupid trade, but I'd rather take 22 bucks than to lose 100. I just need one person to say why I felt uneasy about taking this trade, even though it was a beautiful trade. Like, it was a beautiful setup. There was opportunity to go up here to 918, 920, right? But yeah, one thing, we're going against a trend. Okay, we know that. Two, it was just too big of an explosion through that 20 SMA. Like, I want to sit right over it and then have room to really go, right? So I just, it's a feeling that I don't think you can teach. That is just, it's just intuition. It's just experience, right? Like, it was too big. And again, if I did not cut that trade, guys, I would have been down from 19,905 all the way to 74. I would have been down 40 points. 40 points would have been down almost $200. Bear flag seems strong. Yeah. I'm going to take this off. This is driving me nuts. What do you think about that? What do we think about that? Is that strong enough? Can we say that that's strong enough? It's kind of a weak bear flag, but maybe. Maybe. 5-minute chart's got a flat bottom though. 1-minute chart, a little bit of a bear flag. 5-minute, a little bit of a flat bottom. Yeah, trend is down for sure. 100% trend is down. Trend is down. But again, we're coming out of lunch. Guess what's going to happen? Everyone's thinking downtrend, downtrend, downtrend. And you come out of lunch, you wick a new low, and then it snaps back 50, 60, 70 points. So we got to be careful here as we come out of lunch. You might sweep a new low of day, and then it might reverse. I want to take this flag breakdown here. Just trying to think of how risky I feel here. Yeah, if you have a no lunch thing, then don't trade it. Wait a couple minutes. It looks like we want to snap a low here. Do we want to take this thing here is what I'm saying. I'm in the trade. I'm in the trade. 859 is what I need to see here. Have short patience with this trade. That was a bad idea. Too close to coming out of lunch here. Let's see if I can battle out of this for flat. I don't really like it. See if I can battle out of this thing. Because one pop is gonna pop 20 freaking points. You definitely have on a 5-minute chart, you definitely have a flat bottom there. Not what I want to see. I'm gonna get out of that. Good on you, and I hear you on do I get it? Trust me, for the past week I have seen and predicted moves totaling the 10K profits, never pulled the trigger. Yeah. The break of the wick would have been better. Again, let me make a note here. The way I've normally been playing these flags is allowing it to break and then taking confirmation. I jumped it early. Like I said, guys, I'm over trading here on micros, and because I'm trading micros, I feel like I can throw trades around. But truthfully speaking, I want to, because I gotta be transparent. If I wasn't up $1,600 and let's say I was up $116, I would not have taken that trade. So like that's a thing with trading. You know, you feel you can take trades because you have profit and not whatever. Anyways, analysis paralysis, and I can't move on because I lost 200 on a sure setup. This is why I love trading. Yeah. Yeah, man. Just everything comes with time. Just keep hammering it away, you know. The worst thing anyone can do is kind of give up because they're not having any success, or you know they fall victim to, you know, not trusting themselves. But I mean, it all comes down to execution. Keep getting rejected at this 20 SMA. This flat bottom is what has my interest here. I believe it's 9, like it's like 2.5 years. 2.5 years before I became consistent to where I can pull money out of the markets, like without giving it all back and some. So it went from like make money, lose a bunch, right? Lose some more, make it all back. Lose a bunch, lose a bunch, lose a bunch, adding the fresh deposit in, losing a more, making a big trade, giving it all back. I did that process for like 2 years. And then like around 2.5 going into 3 years, I was like, okay, we have a 20 SMA play here. After about 2.5, 3 years, it then went into smaller gains, but smaller losses. Break even, but I wasn't going down anymore. Does that make sense? Like like the balance wasn't going down. It was like, okay, go down for 2-3 days, and then a week worth of green trades, I'm flat. And then it was like flat for like a year, like I was like a break even trader, and then it was like really going into year 4 because I've been doing this full time for 8 years. All of a sudden it just clicked where yeah, I still have losing trades, I still have losing red days, but like now I learned the money management part was way more important. It's not necessarily about like what setup I'm taking or what strategy. It's about how well am I managing the balance, you know? And then I've been trading full time for 8 years, but I'm a options trader. The prop firms I've only been in since 2023. It's like a side income. I definitely do not make like $20,000 a month trading prop firms. I do like 6 to 8, 6 to 8 a month. We're in the long here. I want to see if we can target something a little closer to 900. Oh, fuck. It just pulled back. I broke even. Started with options. Started with just luck and inside knowledge. Yeah, options is great. You can definitely lose all your money, though. Yeah. Closing at $50 is definitely an easy mentality. Again, guys, if we do get up into these 900s, take your profits. Here we are at 900s. There it is. Take your profits. This trade idea was a 1 minute 20 play. Scared myself out of that one. But this is the target I was looking for right here. 50 SMA. $26 trades. Way too much here. Way too many trades today. You see what I mean? How we come out of lunch and look at the algo turn on the other direction. Notice that, guys? How algo turned on the other direction. What did we do all lunch? We sat here all lunch and basically we slowly bled out. We get out of lunch, an immediate switch, right? An immediate switch. Does that mean we're not going to go lower? No, it doesn't mean that. But what I'm saying is the short time you can see how we failed to make a new low coming out of lunch and then it just popped. So lunchtime for me here in California, 9 a.m. to 10 a.m. So noontime on Eastern, 12 to 1. But for me, it's 9 a.m. to 10 a.m. So that 9 o'clock hour to 10 o'clock hour, I tend to look at what did we do prior to lunch? Okay, let me see if the market's going the other way. Coming out of lunch, I tend to see what did we do during lunch? Let's see if the market continues that, which means we would have taken out a low of day, which means I would have been short. Or do we reverse that move? Look for a setup to reverse that move. And the setup was the 1 minute 20 SMA play. Get into the trade, and then you want to target that supply. Yeah, 12 to 1 Eastern. I do not copy trade. Sometimes I do. Sometimes I do. But on a day in and day out basis, I normally trade my accounts separately. It's just for me, I spread out my risk that way. I trade with Apex. I'm funded with Apex. I'm funded with Top Step. And I recently just got funded with day traders. The next prop firm that I will look to get would be Take Profit Trader. I've heard nothing but good things. Tradeify is also on the list as well, but I haven't traded with them yet. I've been okay with the 3 firms that I'm using now, or the 2 firms that I'm using now. That's a beautiful move. Damn it. I need to go to a 5-minute time frame. We might be stretching up into 940s. This might be stretching to 940s. We're out. $200 there. Just taking momentum on that. I went to 2 mini contracts, just grabbing momentum. We broke out of all I'm looking at here. That's it for me, guys. Current P&L is up 1785. This is what I was looking at. We broke out of this area, this little consolidation spot from lunch. There's momentum here. Let's just fire the trade, targeting that. Again, go up, get a couple $100 on it, get the hell out. That's it for me, guys. 27 total trades. Again, a lot of that shit is because I was trading multiple contract. I guess I don't know even how that works, but anytime I scale out of it, I guess it counts as a trade. What are we at here? 81% win rate. Longest trade time was 6 minutes. Average trade time 48 seconds. So you guys can tell there I'm very quick with it. Winning trades 81%, 18% losing trades. So I had 5 total losers. Average losing trade was $173. Largest losing trade was 370. That came earlier in the day when I was trading a couple of minis. Largest winning trade was 560. Average winning trade 120. So it's about a 1-to-1, right? Again, here's a point that I want to make too, because this question has been asked before. Like, I operate a negative risk to reward. You know, where I might be looking for a few points, 5 points, 10 points. And you know, I might be giving up 20, 30 points. And people are like, "Oh, you're never going to make any money that way." You know, blah, 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 blah. The thing is this, guys, if your strategy can win more than it loses, you will be profitable. But the thing is you got to walk away. Now, I don't look at my risk to reward per trade. That's not how I analyze it. Now, I think a lot of people do. Well, if I risk, I'll use dollars. If I risk $500 and I'm only making $100, that's stupid because it's going to take me 5 trades to get back. I agree with you. That is going to take you a long time to get back. But I analyze my risk to reward on a day-by-day basis. So at the end of the day, my average winning trade is $120, okay? Based on the setups that I take. My average losing trade is 173, okay? My largest winning trade was 560. My largest losing trade is 370. In the long run, if I analyze my stats that way, I'm winning a little bit more than I'm losing, okay? And I'm about a 1-to-1 overall on the day when it's all said and done. Because remember, trading is a game of probabilities. I don't give a shit if I risk, you know, $500 on one trade to make $100. How does that work over a period of 100 trades? Can I get those averages to match up around a 1-to-1? If I can, and I can make those averages, which I've been doing this a long time, the averages work out to around a 1-to-1, okay? If you just play it smart. If you can average around a 1-to-1 over a series of trades for the day, and your strategies hit at over 50% of the time, guess what? You will be profitable. So we won 81% of our trades at around a 1-to-1 today. Regardless of the dipshit who says, well, if you risk 300 and you only make $50, it doesn't make any sense. I'm not worried about that right now. I'm not worried about that. Yeah. But again, but I want to make this point though, because then it leads to a follow-up. Well, if you win 80% of your trades, how come you don't just trade 5 mini contracts? Well, dipshit, I'm on a prop firm account that only allows $2,000 worth of drawdown. So if I do take one losing trade, guess what's going to happen to me? I'm going to get my ass blown out. Does that make sense? So I can't trade 5. Well, you can trade 250 accounts, but it takes too long. I don't want to trade a 250K account, 300K account. It just takes too damn long, you know? So also, let me tell you this. Some days my trades don't fire at 80%. There was a day this week I took 7 trades, landed 100%. However, there was a day last week I only won 59% of my trades and barely made $150. You see what I'm saying? But over the series of a body of work, and I like to do my bodies of work over 30 days and at least 150 trades, over a series of 100 to 150 trades in 30 days, the average is around a 1-to-1, and my win rate is around 69 to 70% if I don't go off the fucking rails, right? Again, if I don't go off the rails, that's what's going to happen. Now, do I go off the rails? Sure, like anyone else. Do I lose accounts? Sure. I lost one 2 weeks ago. Okay, whatever, it happens. We have more in the chamber. We've got more funded accounts ready to go, and that's also why I don't copy trade. I'm a big fan of the benefits of being able to copy trade. I have 13 accounts now that are funded. I'm a big fan if I can take a payout of all 13 accounts at once, but you know what I'm not a fan of? If I go off the rails one day, which I could just wake up on the wrong side of the bed and just I'm off the rails, and I lose all 13 of my accounts in one day, right? So I'd rather forfeit one for the greater good and still have 12 with more in the chamber ready to go than to lose them all and then have to restart. That's my thought process. Again, it's my thought process. You guys can operate your own thought process, but like that's what's worked best for me. And again, yeah, I shoot myself in the foot a lot of times because I'm not going to have crazy months where I'm doing like $20,000-$30,000. Over time, if I continue to add more funded accounts, yes, I don't really spend a lot of time on evaluations because I just fucking hate trading evaluations, and I'm not making any money off them. So I want to make money. Like that's the thing. I want to make money. So I know what I can make off of these funded accounts. I'll just continue to trade them and then, slowly add in funded accounts naturally and organically as they come. But see, that's another thing too. People are always worried about like the commissions. The commissions are not much. Like, bro, I overtraded the shit today. Like I overtraded a ton, right? I traded minis. I traded 5 micros. I traded 2 micros. I traded 3 minis. I took 27 total trades, ins and outs. Okay. The commissions is $100, bro. It's $100. Like, we're not really worried about that. Like, we're not really worried about that. Like that it's not gonna harm you. Now, if you're taking 1,000 trades a day, you're taking 200 trades a day, then sure, and you're taking 2 points profit, sure. But like, I've never, ever in my, what is it? We're in 2025. I started trading prop in 2022, 23. I forgot when I got funded. Top Step I got funded in 2022, I think. I've never gotten to a point where I'm like, damn, these commissions are really hurting me. Never. Never. Like, I've never even thought about the commissions. Again, commissions on what? We're trading a fucking paper account. Like, that's what we're trading. Like, it's not even real money. It's not even real commissions. So they're charging me $100 commissions today, fake commissions on fake profits. Who cares? My goal is, can I take out, what's the max, right? I could take out 2,000 from an Apex account. I could take out 50% from a Top Step account of my balance. That's all I'm worried about. I don't really care about, oh man, I would have an extra $400 in my pocket if I didn't get those darn commissions. That it's irrelevant to me. It's a paper account. This is not a personal account. If it was a personal brokerage account, sure, it would make sense. It would be like, yeah, maybe you want to tighten up those commissions a little bit because in the long run it might hurt you. But I mean, we're talking about, prop firms. We're on a payout system. Like the most we can take is 2 grand. So just get it to where you make 2 grand or 1,000 or 1,500 or whatever your case is. Well, I mean, yeah. Again, if like I don't want to sit here and preach that it's easy to do 80-90% win rate. I mean, I don't know. Like that's just the way that it breaks down for me. But it breaks down that way. I'm going to be honest. It breaks down that way. And again, I'm not like these people are going to say, if you just follow this one strategy, you're going to win 80% of the time. The reason why it breaks down to high 70s, okay, high 70s to low 80% win rate is because I have no problem if I get into a trade with, let's say, one mini contract. I have no problem taking $80. I have no problem taking $120, which is 4, 5, or 6 points. I'm not sitting there saying I need to make 20 points, 10 points, 12 points. Like I'm getting in, I'm getting green. That's the only reason why the win rate percentage is higher. Now, if I had a take profit of, let's say, 15-point stop loss for 15-point take profit, that win rate is going to go down from 85, 80%, probably down to like 65%, 68%, which is going to eat a lot of profits. So again, I do have to say that. Also, if I get into a trade, and if you look at my average trade time is 48 seconds. Let me ask you guys this question before I log off, because I want to log off. If my average trade time, which for me it's under a minute and a half when I look at it for the whole month, but for today it's 48 seconds. If I'm in a trade for 4 minutes, for 3 minutes, and I'm essentially flat or around break even, should I be in the trade? Yes or no? Just answer me that question. If I've been in a trade for 4 minutes and 15 seconds and I'm around break even or up or down, should I be in that trade? No. Because why? My stats tell me that when my shit works, I'm in and out under a minute. So why the hell am I holding a trade 4 minutes? Because I'm holding, hoping. Now here's where people get all screwed up. Because let's say about 30% of the time, you are going to make money on that trade. It's just going to chop around. You're going to be down and draw down, and then it's eventually going to go in your favor. And guess what? In the back of your mind, it's always going to be in your head that, well, if you that one time you held a little longer, it came back. But guess what's going to happen about 60% of the time? You're going to lose. And not only are you going to lose, you're going to lose bigger because it never was really working for you in your favor. So again, that's why information is so important. If you don't know your information, you're dead. You're dead. You have to learn your information or else you're screwed. And everyone's information is going to be different. We're getting a flag pattern here. If I extend the original one, look at, guys, we're getting a flag. So you have to know your shit. And you're only going to know your crap and by taking trades. I'm telling you, if I'm in a trade and I'm, especially if I'm in minis, I'm sweating, I'm sweating. Like if it doesn't work, I got to get out. But typically I will only be in those trades for that amount of time if I'm trading micros. That's what really like there was a trade here. What's my longest trade time? 6 minutes. I can guarantee you that it was not trading minis this morning. It was trading micros. But again, maybe some people, there is some people that can't stand. I really want this short setup. Yeah, we want to see it break. Let's see it break. I got into trouble last time. Watch, and I say that, and this one's just gonna flush 30 points. But there are some people that they don't really like in and out fast, So I would recommend to those people, just trade micros. You can sit in these damn things all day long. Not lately because of the range, but I mean, hey, you can trade a couple of them and you can give yourself a lot of room to kind of let the trade try to digest and work out, right? That's what I would recommend. And hey, in those situations, the trade might come back around and you don't really have to have such like a tight stop loss. Versus on those minis, in these conditions, the shit better work like right away. Or like you're gonna get blown out. Like how many of you in the last, let's say, month have taken a trade on minis and just got destroyed like in one candle? How many people? And don't fucking lie either, because it's happened to me. Yeah, I'm telling you, that shit's crazy right now. Yeah, I'm telling you, and again, it's a lot of it's psychology. It's like either it works or it doesn't, like, but it's gotta work. Yeah, it's gotta work, you know. And I would say like I probably like the bulk obviously of my P&L does come from minis, but like the majority of my trades are probably micros. Like the bulk of it. Like I might make, let's say, 150 $200 trading micros, and then I'll see like a really good setup and I'm like, okay, cool, let's fire away a mini or two on this, and then boom, you stack up another $200-300 on top of it. Like that's kind of how I operate. But yeah, well, yeah, I mean, you gotta dial in that stop loss. I never run a stop loss. I'm just market in, market out guy. I could have taken this damn thing. Look at it go. 8 seconds here before a new candle. I want to see it pop back into this area. Whoops. Oh shit. There we go. In the trade. Okay, 150, $170, whatever it was. We're done now. $1,900 on the day, guys. That's it. Just took the confirmation there of that break of that flag. We're out. We are out. We're done. We're done. We're done. We're done. We're done. I've already said it a million times. We're done. We're done. That's the shit that'll get me into trouble. That right there. Not that trade, but what I'm doing, where you just keep firing away. So for my safety, for all of your guys' safety, best of luck. I'm logging off. I'm sure there's other streamers out there right now that are still streaming. Yeah, I already know that, but we built up a nice little day today. Um, with that being said, guys, good luck. I'll catch you guys all tomorrow. What's tomorrow? Friday? Tomorrow, Friday. I'll do a stream tomorrow. Also, guys, if you enjoyed the stream, make sure to hit the like button, hit the subscribe if you're not already. And if you guys do need Apex accounts, 80% off, make sure to use your boy D Anthony's code at the top, or you can use a link down in the description. If you guys want to try out day traders, try them out. I like Quantower. I do like Quantower. They give you that license for free. But anyways, guys, all right. Best of luck, everyone. See you guys all tomorrow.